Hello, monsters. This is Fahad. I'm back. First, I just want to quickly apologize for slacking essentially for the last 5 to 6 days, more like a week. Have not been able to put out a lot of videos simply because, as you all know, that I bought a house recently and the movers are coming this Friday, May 6th, and so I have so much packing to do. The furniture is being delivered from all kinds of places. A lot of things are being put away in boxes, and then I'm moving some of that stuff myself, but keeping most of it for the movers to come on Friday. So there's just a lot of stuff going on every night after the market close. So, anyways, I want to take a look at two stocks today, both retail, Macy's and Nordstrom. Macy's and Nordstrom, symbol M and symbol JWN. So here is Macy's chart. It's a big daily chart right here. Came hard all the way from from July to the end of the year in 2015, then bounced and then started to print basically a head and shoulder stopping formation. So there is your left shoulder, there is the head, and there's your right shoulder, and now it's rolling over again. I want you to take a quick look at the close look at this level right here. Call it around 38.85. Okay, so technically this is forming. This came again, and then it's forming a bear flag, or basically a giant head and shoulder formation. If it breaks down here through 38.85 or 38.87, whatever you want to call it. And earnings are going to be coming out sometime on May 11th, I believe it is. So yeah, so May 11th. So, and then we're going to have retail sales also coming out before that, along with a whole bunch of macro data that's coming out this week. So all of that could impact the stock. But anyways, if it breaks down technically from here, from 38.80 or 38.85, you may see this slight bounce maybe around here, around 38.40, but frankly, if it's a high volume breakdown, I don't see this thing stopping until it goes all the way and retest. See these volume over price supports until it goes all the way and retest the 52-week low from around 35.20. So between 38.85 and 35.20, we're looking at least 10% to downside from here. If earnings are absolutely horrendous, then this could probably break the 52-week low and go all the way down to low 30s. So that's Macy's. If you go to JWN, Nordstrom, you'll see the same exact picture here. It came down hard in second half of 2015, then it bounced, and then here is your left shoulder, here's the head, here's the right shoulder, and here's the neckline. Support right here. Let's put it right around, actually let's just use the round figure 50 in this particular case. So there's the bottom. Basically 2 weeks ago at 50, it bounced here, and then it came down hard and bounced again on Friday. Then it bounced again on Monday, yesterday, and today again. It's trying to hold this $50 level. So many multiple attempts to try to bounce off this 50 level. So if it breaks down here through 50, the support starts to disappear, looking at these volume over price support. So you may see this bounce, maybe a little bit support around 49.20, which is only $1 lower from here. But it's also, earnings are coming out on May 12th, so this is one day after Macy's. If it is not able to hold that support around 49, you could probably see this go all the way down to retest the previous 52-week low, which is 44. So again, going from 50 to 44, that's good. About 12 to 13% to downside in this one as well. So there's your technical look. I'm going to quickly show the same exact look in the stock charts as well. So right here is the stock charts. So let's go to, this is your Macy's first. Sorry, this is your Nordstrom first, JWN. So here's the chart. Pretty simple. Bounced 2 weeks ago in early April from this 50 level, then once again, and then now it's back to. How many times do you have to poke this level before you say, you know what, it's not going to hold and it's going to break down? So if it breaks down through 50, look for, my first target would be about 47 something, but I think on horrendous earning this could probably go all the way to 44 to 45 level, which is all the way down here. So you're looking at good 12% to the downside. Looking at, let's see which one, this was Nordstrom, right? So looking at Macy's, same chart that I just pulled up. Let's see, where did it go? Right here. Same thing over here. So if it breaks down to 39, and expect some bounce around maybe 37.80, 37 whatever you want to call it, 37.90, but then if actually really see this going all the way down to 35 levels. So you're looking at about 10 to 12% to downside in this one as well. So here's your technical looks. All right, now let's go to the option market. If you go to Macy's option market, which is right over here, you will see this volume right here. This is May expiration coming up in 17 days. This is regular monthly May expiration. Somebody came out earlier and they bought 3,500 plus of May 38.5 strike puts, with the stock trading at 39.4. So these are about $1 below where the stock is currently trading. They bought 3,500 contracts with 38.5 strike puts. I can tell you exactly what they paid for it. Let me take a quick look. They paid, let's see. They paid $1.15 for these. $1.15, $1.10 to $1.15 for these. So these are still going for about the same price. They paid $1.10 to $1.15. These are May 38.5 strike put. This is about 400,000 bearish bet or hedge, or possible hedge. I don't ever discount the idea that this could be a hedge, but I believe it's a bearish bet. Okay, because I don't see this thing tied to the common stock position. All right. Now, and if you go to Nordstrom, JWN, you will see the same thing, but it's no option activity, no put option activity in Nordstrom today. However, in this particular case, all you have to do is go to my activity tracker. So here is Open Order Pro activity tracker. Let's make this bigger. If I go here, if I do the quick ticker symbol, you will notice right here, back on April 21st, we highlighted, which was really, what, 2 weeks ago or something, we highlighted that they bought 3,300 May 52.5 strike puts for $1.70. Okay, so they paid, that's about, what, 450,000, maybe $500,000 in bearish bets. And so if you go over here, you'll see it's in May, right here, 50, wait, which one was it? This was May 52.5 strike puts. So it was right here. See the 7,000 open interest in May 52.5 strike puts? They paid $1.70 for these, and these puts have already essentially doubled since then. I mean, this was bought on April 21st. I highlighted in the chat room. They've already doubled, but these bears are not quitting. They're still holding in the open interest, and since then we have seen a few more put buying over here in May 50 and 47.5 strike puts. So basically, both of these stocks technically are setting up for a breakdown. JWN below 50. And Macy's below 38.85, and both of them have earnings coming up on May 11 and May 12, which is essentially next week. All right, now on the fundamental side, a couple things I want to quickly run by. First of all, so here is Macy's. Let's take a look at Macy's. These are my notes from activity tracker. All right, so if I make this bigger, you'll see back on April 26th, this is the latest things we have recorded in the activity tracker, there was a cautious comment presented by Cleveland Research. Now, there are three specialty shops. There are three specialty research shops. They don't actually go around basically providing opinions on almost everything and everything. So there are three specialty shops that very closely follow the retail sector and some other sectors as well. And I try to put more weight to what these guys have to say than anybody else, simply because they seem to be pretty good in what, you know, when they present a thought process. So here is Macy's and Cleveland Research. And by the way, those three specialty shops are Cleveland Research. One is called the IT group, something like that, and then one is called the ISI group, which was recently bought by Evercore Research. So basically those three research. But Cleveland Research back on April 26 said that they're seeing that channel checks are coming out pretty negative. They see the I don't get the full research from Cleveland, but they said that cautious comments were presented after the channel check. So there's a quick note over there. All right. And you have history from January 6th, the last time the company posted earnings from on Macy's. The December same-store sales were down 5.2%. The full quarter, the last full quarter, ended 4.8% decline in same-store sales growth, and the company cut the guidance for the last quarter to 220 from 260. However, just to quickly point out, on March 3, we did notice that the president of the company bought 25,000 shares, about $1.1 million insider transaction. information. So we have a little bit cross currents here. We have channel checks coming out negative. We have earnings decelerating sharply, but we have the president of the company buying $1.1 million of insider purchase. So there is a little bit of cross current over here. But that's basically your thought in Macy's. And here is JWN, which is Nordstrom. Same thing you will see over here. But this wasn't back on April 21st when I highlighted that when there was a large buyer of 3,300 May 52.5 puts that we just discussed. Back on February 18 when the company reported earnings, this was their earnings. The EPS came at $1.17 versus $1.22 estimates. The revenues came down $4.19 billion versus $4.22 billion, which was an estimate. And the guidance, which is the most important thing, fiscal year 2016 EPS guidance was cut sharply. From to $3.22 versus $3.53 estimate. So the forward earning estimates are coming down sharply. If you want to go back further, this was on February 18. If you go back further, back on November 12, this was just as bad at that time. To look at the EPS miss at that time, 42 cents versus 72 cents estimates. Revenues $3.2 billion versus $3.37 billion. And the guidance was cut back then to $3.35 versus $3.80. So they cut guidance in November and they cut guidance again in February. So the guidance continues to come down. So has anything changed since then? Should we be worried about this insider buying that's taking place, especially in Macy's? I know that the option activity remains bearish. The chart is looking bearish, but has anything fundamentally changed since then? Well, I'm going to go through one by one 2 research notes on my list that I'm just going to show. First of all, this is something that you probably won't get elsewhere. This is very easy to show. Focus on this line right here. This comes from Citigroup, or I'll just read it to you. This comes from Credit Suisse. According to Bloomberg, by the way, when was this note released? This note was from April 25th, so we're talking last week, okay? According to Bloomberg, which tracks headlines announcing layoffs, there were over 24,000 layoffs announced in the retailing sector in 2016 year to date, including an estimated 4,000 layoffs from the recently announced Sears store closures. Historically, about 2/3 of the layoffs come in the first third of the year. So this implies that there could be over 37,000 layoffs over the course of the year, the highest figure since the start of the series in 2008. The number of layoffs basically that we are seeing year to date, in 2016 is the highest figure since we saw the last time in 2008 when the Bloomberg started tracking this. Given the recent announcements of retailers filing for bankruptcy, we think it is likely the number of layoffs this year could exceed this prorated estimate. So Credit Suisse believe that this would get even worse. And guess what were the top 3 companies aside from Sears, which everybody already knows about? What were the top 3 retailers that are announcing the most amount of layoffs? Nordstrom, Macy's, and Walmart. Those 3. All right, and this is a pretty fresh note. I mean, this was on April 25th. Retail layoffs announcement for 26 on track to be the highest in 8 years, pressured by both cyclical and secular headwinds. I mean, it gets as clear as it gets. But let's take this to another level. So what is driving this layoffs and what's happening? This has come from Bank of America. And guess what? This is today. All right, maybe this is what sparked the activity in the put option activity in Macy's today. This is May 3rd. This is Bank of America. This is their weekly snippet that comes out about departmental store retailing. All right, and guess what? Right here. This is today, Bank of America talking about risks to first quarter EPS at Macy's and Nordstrom. Now this is quite amazing because I've seen a lot of the times, the analysts take a bearish view, but this one goes way beyond everything else. According to Bank of America this morning, it says we model, actually let's start from here. Our first quarter EPS estimate for Macy's is 34% below the street, driven by a lower gross margin assumption. We model 100 basis points of gross margin pressure given the challenging conditions this quarter. We are 9% below the consensus Nordstrom first quarter EPS due to slower same-store sales and gross margin assumption. I mean, Bank of America is 34% below the street estimate, and they expect 100 basis points of gross margin pressure. I mean, this is quite something. To show you one of the charts that basically stuck out for me in this report as I scroll down is right here. And this basically is the crust of this. This is the department store spending trends decelerating further and further. So this goes way back, right? I mean, this is last 10 years of history. These are departmental store credit card spending year-over-year growth. This is departmental store comp growth, which is same store sales growth, as well as departmental store credit card spending year over year. It seems to me everyone is shopping on Amazon and departmental stores are suffering, and this chart basically shows it big time. Now, see this? Major, of course, this happened before the Great Recession in 2008. In 2012, we saw another major deceleration at that point, which was at that time led by I believe honestly back in 2012, there was a moment when there was a very high chance of double dip recession that did not play out, but we were seeing too much of macro weakness. If you go back to way back to 2012, you will probably see a bunch of my notes talking about this. But anyways, then we saw a little rebound, and then this is the sixth straight month, so starting from, or six straight quarters, so starting from just when the oil started to come down, from third quarter of 2014, we're seeing sharp deceleration in both the departmental store credit card spending as well as departmental store same store sales growth. Non-stop deceleration. I mean, we're reaching a level of -5% in departmental stores. Any further downtick from here, if it goes to -6, -7%, we will literally be looking at, I mean, I don't know how you look at this picture and assume that you're possibly not in a recession already in the retail period, but that's basically what we're seeing, unless everybody's flocking to Amazon and shop. So this thing is just horrendous. It just continues to go down. So, these are departmental stores, so of course this is playing its hand in the chart right here. This is Macy's coming down, and this is JWN coming down. So, bottom line is this, to wrap this up. You have charts that are setting up for breakdown. This is Nordstrom, and this is Macy's. All right, you have earnings coming up. You have departmental store spending coming down sharply, according to Bank of America note this morning, according to a Credit Suisse note last week, in which they were talking about mass layoffs, which are now going to be the highest since Bloomberg started tracking data since 2008. You have put option activity taking place in Nordstrom. They bought these May 52.5 puts last week, or 2 weeks ago essentially, which have doubled, but they're still holding in the open interest. And in Macy's, they're buying these puts. 3,500 of these puts were bought, 38.5 strike in May. Both of those are front month puts. So how would I play this? I think you keep it simple. You're looking for a breakdown in both of these stocks. I do not think you need to wait until the earnings get closer. I think you can go ahead and place the bet today, because it may actually break down today simply because the S&P is not doing well. I mean, this is S&P futures chart, ES. So, if S&P is basically testing the Friday's low. If you break down through Friday's low of 2045, actually this is SPX, this is a future. So this is the cash. This is S&P 500 cash. So if S&P breaks down through Friday's low, which was, what was the low? Which was 2052, which means the 2040 is going to be a critical point, which is what I'm highlighting every single morning in my chat room. If you're not able to hold that 2040 level in S&P, I'm afraid you're going to see this. You're going to see S&P probably pull back hard from that point, which may bring. I mean, let's go back to ES just because I get the volume of price supports and resistances over here. So you may be looking at all the way down to this 1999, which is another 50-60 points to downside. So if I go to SPX, just to be on the safe side, to give you the cash, if I draw a trend line here, right here. Right here is your trend line. Let me make this closer just to show you. So here's your trend line in S&P. All right, let me make this bigger. So see this? It rebounded here May 24, then March 24, March 29, then again on April 7th, and then again on April 12th. Then again on April 29th. That's 1, 2, 3, 4, 5, and now it's the sixth time we're testing the trend support. The problem is the MACD is this time, falling hard. It is basically both RSI and MACD are both making the lowest points. They're hitting the lowest point since February, and the volume is pretty high in the sell-off. So are we to trust that S&P is going to bounce again from this trend line and then make another run maybe towards 2125, or this time with this big bearish engulfing candle we're looking for a breakdown, which means it could turn into a pretty ugly picture, and that means VIX could spike as well. While we're at this topic, let's take a quick look at VIX too. So here's VIX. If VIX starts to break out, see this. This is from early April, and this is from March. So call this right around here, 1680, or about call it 17 level. So here's 17 level from March, then 17 level for a couple times in April. There's 17 level again. Let me make this a little bit closer. So if we start to break out to the 17 level and VIX could spike all the way towards 22, 23 level. So all that could line up, completely, and retail is doing quite bad in these two companies. By the way, this is XRT. This is the retail stock, and so this is once again the same exact technical picture as Macy's and Macy's and Nordstrom. So take a look at this. See this? This sell-off that happened in late March and early April. Look at the volume behind it. This was a massive volume behind this when this sell-off happened. And then we bounced, we made a lower high, and then on Friday sell-off that happened, it was a heavy volume right here again. I hate it every time when a stock is coming to a trend support on high volume, because that tells me that it's just a matter of time before it breaks down. Mark this down, write this down. I mentioned this many times. Anytime when something comes to a support level on high volume, that means it's got the thrust behind it, it's got the distribution behind it, chances are it's going to break down. And you have RSI and MACD both confirming that as well. But the same thing happens on the opposite. Anytime when something is coming up to trend resistance on high volume, that means it's got the thrust behind it, it wants to break out and it wants to run. So retail to me is acting pretty weak over here. So keep an eye on XRT, keep an eye on JCPenney right here, which has a huge level to fall all the way to 8.40. We have been discussing put activity in this as well. Keep an eye on Macy's, keep an eye on Nordstrom, and lastly keep an eye on the entire S&P picture, which is right here. S&P picture. If it breaks down here, we could be seeing some trouble ahead. All right, that's it.